Hello, everyone. I guess we're live. Yes. Hello, everyone, to IndiaBits' first session on YouTube. And we're talking about peer-to-peer exchanges and their regulation today. We're live. Yes. Hello, everyone, to IndiaBits' first session on YouTube. And we're talking about peer-to-peer exchanges and their regulation today. I hear feedback, so please give me a second. I guess some stream is open on my end. Let me close that. Yes. So, welcome everyone to IndiaBits session on YouTube. And here we are talking about peer-to-peer exchanges today. With us, we have, I'll be your host today, Skang, and with me, I have my co-host, John. He'll be our main host. I'll be the YouTube stream coordinator. And I'll first tell you a little bit about peer-to-peer exchanges. So after Bitcoin started, one of the earliest exchanges started over forums and all, and that was based initially on Web of Trust, which is a network of reputation that people have built online. And based on that model, there were various reputation-based models on various forums that were working, which that help people exchange cryptocurrencies for whatever fiat their country uses. So then one of the major platforms that came forward was local Bitcoin. Everybody knows about that. And then from there onwards, now we see that there is, it's like a hydra, and there are so many new concepts, and the technology has grown as well. So there are so many new things coming out. So today we have between us a few exchanges, and they would like to talk about, and we'd like to discuss about peer-to-peer exchanges, their technical aspects and everything. I'd like John take over, and he'd be introducing them.
In for the stream. For today's session, we'll have primarily three major exchanges, Instashift.io, Hodl Hodl, and Geotis.com. The primary objective being the fact that we're trying to look at new emerging players in the P2P decentralized exchange market, given what governments globally have been doing with certain exchanges in different regions. So the primary idea today is to make users aware about alternative solutions and the risk that probably regulators have through this new hydra that's growing out. For the session that's up ahead, we'll be primarily starting with introductions to the platforms. So the founders would primarily be explaining their backgrounds, the motivation for why they do what they do, the vision that they have for the platforms, and the key challenges and opportunities that they see in the space. So the order that we'll be going through is first, Hodl Hodl will be speaking, and then we go through Instashift and then Geotis.com. So over to you.
All right. Hello, guys, and thanks for having us. It's me and Max. So Max is in the white shirt right there.
Hi.
We're both co-founders of Hodl Hodl peer-to-peer exchange. And just right off the bat, I wanted to say that a lot of people were trying to use the word decentralized with our exchange, which we're not. We are peer-to-peer and not decentralized. And I know a lot of people get pissed off because somebody used that word decentralized with us, but it's not true. We are a peer-to-peer exchange. And what we're trying to do is we're trying to help people around the world exchange Bitcoins for fiat currency, whatever that fiat currency is, whether it's US dollars or euros or rubles or rupees or Thai baht, anything really.
Roma, you'll continue?
Yeah. I was waiting for you, man.
Yeah.
Okay, so go ahead.
Go on.
All right. So the main advantage that our exchange actually has over local Bitcoins, which we consider our competitor, our biggest competitor, is that we don't really hold the Bitcoins, and that's kind of really important in terms of security, because what we do, we have a so-called multi-sig escrow, that is, seller deposits Bitcoins into a specifically generated Bitcoin address, to which there are two keys. that are required to release the funds. And one key belongs to us, the other key belongs to the seller. And that's inherently safer than what local Bitcoins has, because they store all of the Bitcoins of all of their users in a centralized wallet, which is really like a honeypot for the hackers. And that's something we don't really have, and that's what makes us inherently more secure. I guess that would be a good introduction for our exchange.
Yeah.
Thanks, guys. I was just curious what inspired you to start the platform, and what was your growth pattern like during the initial months?
I think Max would be more qualified to answer that question, actually.
Yeah. The inspiration was that we both tried to use local Bitcoins, and it was quite difficult in terms of usability, user interface, user experience, something like that. And another thing that we were a bit surprised that they were stating that they're truly peer-to-peer exchange still. In decentralized exchange, still they have this centralized storage scheme implied into exchange, and which is not safe eventually, as Roma mentioned, because we saw with Mt. Gox and other centralized exchanges that eventually at some point in time you will be hacked. And that was our main motivation, to create something safer and something more simpler and user-friendly than local Bitcoins.
To InstaShift and Tiotis, and we'll be coming back again through with questions on each exchange again, right? So yeah, InstaShift, would love to know the inspiration behind the product, your backgrounds, and the key challenges and opportunities you've seen in the last few months.
Sure. Hey, so I'm Rahul. I'm one of the co-founders of InstaShift. I had spent over a decade at Microsoft on the dark side. I finally stepped over and decided to do something on the other side. So I'd been doing what's called algorithmic trading for the last few years. And over the course of the last year, I realized that the approach we have fundamentally taken to trading has been taking all the bad practices from the stock markets. So you get very complex user experiences, mostly in the exchanges that you see. So when we started out with InstaShift, we had a single goal in mind, that we wanted to make trading really, really simple. That means my mom and pop and my driver should be able to go ahead and trade on InstaShift whenever they want. And just like what the folks at Hodl were saying, the main intent with any such platform is really that people directly buy and sell from each other, and that the surface area of the exchange be reduced in terms of its regulatory focus. So that's what we've also done at InstaShift. Our first motive is make it simple for our users and do as little with the government as possible, which includes opening bank accounts, opening a whole bunch of things. We've started in India around 5 weeks back with the BTC INR pair. This month we are releasing several new altcoins and releasing our second geography in Canada.
All right, just curious, since India is your primary market, did the ban/notice from the government have a direct impact on your user base? Was it a hockey stick growth? Any inputs you would like to share on that?
So it's interesting. I think there's been a very wide interpretation of the RBI so-called ban. It's still not illegal though, and though things are getting tougher by the day, I have actually seen glimpses of what might become even an act going forward. Hopefully the government doesn't make it illegal, but short of them making it illegal, I don't actually see the OTC story dying down anytime soon in India or elsewhere.
All right, last question before we move on. How did you find your initial batch of users? Because from what I infer, you started around the time there was a lot of scrutiny in the space. And I was just really curious, how did the liquidity start building up on the platform since day one?
So we launched a week before the announcement, and no, it was not planned. Just happened to be there. Though we did see a spike of users from it, like all the others, I'm very critical of what some of the steps the government has taken in this space.
All right, thanks. So moving on to geotest.com. Would love to hear from you guys. Background, inspiration, thoughts in general.
Okay, great. Guys, I'm sorry, I'm going to put up a PPT here. Really sorry about that. I'm not really good at following up my points, so I need a PPT to help me out here. So I'm just going to share a screen now. Sorry,
Sure.
This is the problem with all the business guys, They always end up having PPT presentation.
Go ahead.
Yeah. Okay, so quickly setting up. So we're Geotest. So this is my team. There's Arjun and me. So we both are co-founders of Geotest. We both are IIM Calcutta alumni. That's how we both know each other. Then I went to Amazon. I was handling the European region. Then I came to the Indian region. I was handling the toy segment. Arjun was with Vodafone. He was handling the Madhya Pradesh territory. Then he was handling the Southern territory. So we both were bit by the cryptocurrency bug, and we've been trading for quite some time. And then we found there are a lot of issues that we kept facing every now and then, be it in Indian or even in international exchanges. So we thought that, okay, there is something that we can do. The principles that we see in, whatever we saw in Amazon or Vodafone, why can't it be applied here? Why can't this be seen as a business problem and can be tackled in a better way? So that's how Geotest started. So Geotest is based and registered out of Chennai, India. So we launched 1.5 months back. Interesting when we were asking question to InstaShift about the RBI news and everything. We launched exactly 2 days after the RBI news came out. We are like, wow, what a timing we guys have. Right. So that's quickly about Geotest. So see, one key feature that we started when we wanted to build Geotest was, so in marketing terms, they call this as marketing myopia, right? Usually people start off building a product and they start sticking to the product a lot. They don't understand that you keep building products or solution to achieve the end solution what the customer wants. So that's how we built Geotest. We don't really care if it is a spot exchange or it is a peer-to-peer exchange or it is any form of exchange, be it decentralized or anything. Whatever solution is required for the customer to do a trade easily, Geotest will be providing that. So that's exactly how we started building Geotest. That's why if you notice, Geotest is one of the very few exchanges which has got both an open order book spot exchange and a peer-to-peer model. So we wanted to provide a one-stop solution for a customer who wants to do any type of trade he wants, be it a crypto to crypto pair trading that he wants to do it an open order book, or an INR to crypto trade, or that he wants to move to a peer-to-peer exchange, start trading out there. We wanted to save the customer costs of moving from one exchange to another exchange, just because one exchange doesn't have an X feature and another exchange has the X feature, right? So we wanted to reduce that particular cost and convenience that the customer needs. So that's how we started building Geotest. We wanted to build a one-stop solution where people can do whatever they want to do for doing a better cryptocurrency trading. So that's quickly about us. People, you can try register with us. We have an instant KYC process. We don't take more than 3 minutes to do our KYC. It's our average time is somewhere around 2.5 minutes. It's what we're running at now for KYC. Now, I'm not going to dwell much into how P2P works here. I think I'll take it in Q&A if someone has got a doubt on how P2P is exactly, how do they work. Now, so we support currently 5 coins, Bitcoin, Litecoin, Bitcoin Cash, Ethereum, and Ripple. Be it a peer-to-peer format where you want to buy and sell in any of these coins, or in an open order book format, you can trade with us in any of these coins. And there are a slew of other coins that we have planned for future. We're just waiting for some more liquidity and registrations to build up in our exchange so that we can keep launching a lot of these other coins. And we are taking suggestions. So please let us know if you have any particular coin that in your mind you want us to launch. If we get more suggestions, we'll be launching that as well. So about a dispute resolution, maybe I'll take this up in the Q&A event.
That'd be better.
Yeah, so I'm not going to dwell much here. So quickly about the quick offers that we are running now in Geotest. First 1,000 registrations, it's 50% discount on trade fee for lifetime. So whatever trade fee we're gonna keep, including in future, you're not gonna be affected by that. And for the spot exchange model, we come up with a promise of we'll do a 30-minute withdrawal, or else we're gonna give you 10 XRP free. So it's a promise that.
So Arjun, we'll get back on that. We will be discussing marketing specifically towards the end.
Okay, great.
All right. Yeah.
Great.
Okay, quick question before we move ahead to the other questions though. Since you're India specific and since it states that you're registered in India, how are you really coping with the regulatory scrutiny / pressures and uncertainty that's there in the region right now? Are you considering moving abroad?
See, the frank thing is, the current regulatory scrutiny or pressure, it's more of mental than actually being enforced, right? So we don't have any plans of moving out unless and until it's actually being enforced, right? So the frank thing is, unless and until cryptocurrency exchanges are completely being kicked out by the Indian government, I think we'll stay here in India. All
right, thanks. So just to give you guys a gist of the kind of questions we'll be discussing on the business side of things, we will be primarily first looking at your ideological stances, because I think it's important users understand what matters the most to you as an exchange. And then we'll be looking at the operational challenges that exist in the space in general. So the first question I really want to put out across to everyone that's there on the panel is, how important is censorship resistance to you as an exchange CEO? Like, if the government comes through and says, this is more about me enforcing my laws, we don't care about your users, would you, I mean, to what extent would you go to protect your users?
Right, so that would be me, I see. My microphone was unmuted. So, okay. I think it's important to have a stance on privacy and regulations and all of that. And I think Bitcoin was indeed invented for a reason, to have a permissionless system where more people can participate. So we as an exchange, we started with that premise, for sure. And part of the reason why we implemented a multi-sig escrow, and part of the reason we don't hold any money, so our users don't even have to trust us as an exchange. But I mean, I think it's kind of a difficult question, because governments across the world, they can be very powerful, and they can do a lot of things to harm both businesses and the users. So one has to be very careful, and one has to find ways in which the business can continue working and serving its customers. But then also, stay within the law, and that's what we definitely are trying to do. But we also are looking at ways currently to make our exchange not just peer-to-peer, but also decentralized. And I'm not going to go into details about that, but we definitely are looking at ways in which HODL as a Bitcoin exchange can become more censorship resistant. I think it's a very important thing. I think it's going to continue to be important in the coming years, and become more important than it is now.
All right.
Yeah, I wanted to specifically state that we don't do any KYC AML, and most probably we won't do that. Again, because there's a rule that if you don't hold any funds of the person, so you're not acting like a third party in terms of transferring money or crypto from wallet or to wallet, you don't have to do KYC AML now.
Just please mention one exception to that right now that we actually have. Can you mention that?
Yeah, we actually have KYC AML in terms of if you're willing to do KYC AML and if you're willing to lower your commissions. So we don't enforce people to do KYC AML on our platform. It's not mandatory.
We'll have some interesting questions around that up next. InstaShift and Jyotis, guys, how important is censorship resistance to you? And I mean, I would just love to know your ideological stance around the whole thing.
Okay, so should I go first, Jyotis?
Yeah,
Right.
go ahead.
Thank you. I think firstly it's important to demystify that. So what's currently happening, like in India, is it's really the direct taxation department which is going after people, right? So that's where the most concern was, that are people paying taxes on it or not? It's currently not indirect taxes, because the GST Council has yet not taken a stand on
Rahul, you're breaking. We can't hear you.
all right.
Yeah.
Is this still bad? I'm going to just.
It's better. We can hear you.
Okay, thank you. So I just wanted to put context that when we talk about government intervention, it's typically at 3 levels. There's direct taxation, which is usually the biggest concern. There is indirect taxation, which will become a concern, especially if exchanges do not pay GST, or if sellers are not paying GST when they go over 20 lakh sales in a year, as an example. The third larger one would be AML, right? So KYC is a different issue. KYC, like the gentleman from Hodl rightly said, is applicable to regulated entities, which is people who typically accept or deal in PPI or in cash or treasury bonds, etc. But particularly AML is still an open-ended intervention. There could be fairly serious intervention from multiple departments when it comes to AML. And in case they do come across to exchanges with a charge of AML, frankly, there is no other way than to share data about users. That will happen, right? Regardless of
Shouldn't you be collecting it as a business, though?
Can you clarify the question?
I mean, assume regulators knock down your door tomorrow and they ask you for users that have transacted on your platform. Wouldn't you be liable to have some kind of information on your users?
Well, so that's what I'm saying. You have to look at that question in terms of which department or which law. Like in India, there is a RBI specific KYC law. There is a PPI law. There's a direct taxation law. So you can't just paint a white brush saying the government is going to come after. They will come after in context of a particular law being violated. And I think as long as our users are very cognizant of the first two, especially, which is paying the right direct taxes and paying the right indirect taxes, there is little to fear as such, apart from a bank's retribution, which might be maximum closing down of our account.
Yeah, that's going to be something we're going to discuss soon. All right, let's hear from Jyotis. Guys, what's your ideological stance?
So, see, how the KYC process started in India, it was more of a self-regulation. There was actually no enforcement of exchanges that they should do KYC, but they did. Actually, so we have been able to trade for so long, for the last couple of years, without any kind of issues from government or banks, because these exchanges voluntarily enforce the KYC. Or else this kind of issues should have crept long back, right? So we believe KYC is more of a responsibility rather than a regulation. See, right now we are at crossroads in India. So government is still brooding on, the GAT committee report is awaited, whether cryptocurrency is legal or illegal. So the key use case, what they are saying, why they should be illegal, is terrorist financing. But actual use case in India is, it's more of traders. Like, we want to invest in future, right? So these people, the source is clean. They are willing to do KYC. If you see all the 30 lakh or 20 lakh or whatever numbers you go by that is being shared, all these people have done the KYC and then they have traded. And for them, they are willing to go at any length. They just want the sector to be regulated. I think at this point of time, we want to stay well within the bounds of law and set an example. So that is our stance. So we want to support traders. We want to support investors. We don't want to support anything that's related to money laundering or any kind of illegal activities.
All right. Okay. Back to banking related questions in particular. Since I think every exchange that we're talking to.
Sorry to interrupt you, John, here. I would like to say that any viewers who are watching, and if they would like to ask any questions to any of our audience, to any of our members here, or to John here, they can ask it on IndiaBits group. So on Telegram, it's @IndiaBits. And please ask your questions over there, and we'll be taking the questions live. Thank you.
All right, thanks. Guys, quick confusion amongst users. A lot of them have been asking the difference between P2P and decentralized. Would you guys like to break it down for users?
Can we show that presentation? We have that slide.
But keep it short though.
Yeah, definitely.
Yeah, sure. Thanks.
Okay, wait. Sure. So I think most of the users are. Can you see the screen?
Not yet. Yeah, now.
Yeah. So most of the users are aware of the spot exchange. So we'll explain just how P2P works. So see, right now the key problem with Indians is that the exchange. If you see a lot of exchanges, they are changing banks every day. So one by one, the banks are withdrawing the support. So in a P2P exchange doesn't need to have a bank. So what happens is a buyer has to send the money directly to the seller. So this is how it works. So let's say here, Nisha is a seller and Vinay is a buyer. So Nisha has Bitcoins, Vinay has rupees. So Nisha is going to deposit her coins in our wallet in a P2P exchange. So it can be held in a escrow like ourselves, or as Hodl has. So you'll have two addresses, all those things are there. So then they have to place a sell order, right? So once a sell order is placed, till now it works pretty much how a spot exchange works. So next thing is Vinay places a buy order. So rather than depositing the money to the exchange's account, Vinay will directly send the amount to the Nisha's bank account. So when he places a buy order, we will be displaying Nisha's account number. So this is where you have to place the you have to send the INR. So once Nisha once Nisha receives the amount, she's going to confirm that yes, I have received payment from Vinay, and you can release the bitcoins to him. So from the escrow, the bitcoin is released to Vinay. So now the transfer has happened without using any centralized bank account. So this is basically how a P2P exchange works.
All right. InstaShift and Hodl. Is there something specifically different in your side?
Yeah. So well, I just wanted to point out one piece. This is, I think, where regulations do come in, especially when a buyer has transferred money to a seller. There is actually a legal requirement of the seller to provide coins, and the important piece here is many of these flows do end up being very complex. There can be more money, less money, money not in the correct timeline, and so on and so forth. And this is one place where there is potentially legal exposure for both the seller as well as for the exchange.
All right. Curious to know from Hodl.
Right. I think the explanation was spot on. There are always, of course, small details. So, for example, it doesn't even have to be a bank transfer between the two parties. So a lot of people on local Bitcoins and on our exchange can do a cash transfer. So they meet at some public place and they do a cash transfer. Although in some countries, of course, it might not be the safest way. Actually, in most countries, I would say, it wouldn't be the safest way to have a trade. And also, there are other ways in which you can transfer money. For example, in many countries in Africa, you can sell a person money to his phone number, or there are many payment systems which are not exactly banks. So there are many ways in which the seller can receive money from the buyer.
Right.
But essentially, yeah, that's what a peer-to-peer exchange is. Now, I just want to dive in a little bit into decentralized, because I mean that was the second part of the question, right? Mm-hmm. A decentralized exchange is the one that doesn't really have a centralized server. We do have a centralized server, as far as I understand. Everybody else here who runs their own exchanges, they also do. And the only decentralized exchange that I'm aware of, and I'm sort of talking about our competitor as well, it's called BISC. But the problem with them is that their software is rather complicated. I mean, you have to install it. A lot of people fail at this point. And then it's, in my opinion, rather difficult to use. But just to be fair, I think BISC team, is a great team of developers. We met them at the conference. I think they're doing a good job.
one could always argue that BISC is relatively far more censorship resistant too, right?
Yeah, correct. Because there's no centralized server.
Yeah. So just to draw parallels here, I think, correct me if I'm wrong, P2P is more similar to a Craigslist/OLX, and exchanges basically interconnect users, and a decentralized version is somewhat similar to what parents or decentralized exchanges would look like.
I would tend to disagree on that.
All right, please share your thoughts. I would love to be corrected.
Sure. So, I mean, as an example, would you call Amazon a marketplace or a centralized system? Amazon is actually a P2P marketplace, right? Because there are multiple sellers. So, I think there's also this notion of a first-party feel versus a classified-like feel, and that's where I think most of the experiences will get engineered differently. Some might be more like Amazon looks classical first-party. You know, you feel you're interacting with them, but in reality, you're not. You are dealing with a third party, and that's really, I think, a UI experience issue which most exchanges will.
Okay, back to the operational aspects, and I think this has been the most frequent question people have been writing in regards. Since most of the P2P exchanges in India currently depend on banks, and a lot of bank accounts have been shut, there's been a lot of pushbacks from bank managers regarding users using bank accounts for token-related transfers or transfers that are large enough in size that raise suspicions. How do you think this model would work once the banks begin clamping down on users for doing token-related transactions? And just to add to this, I understand that the primary argument against this fact is that there are very little ways for banks to figure out who's selling tokens and who's doing a normal transaction. But I would argue that algorithmically, if you really study someone's transactions, it might be possible to have suspicions as to what's going on, right? So how do you go about those transfers that are flagged? Open question.
Okay, so as Roma mentioned, you have multiple options to transfer money to the seller, basically cash, payment systems, phone number, whatever, Western Union. You can do whatever you want. You don't need to use bank to transfer money to a person. And for example, for us, we don't have any bank accounts. So we don't handle any fiat for people, and they just do direct transfer between each other. So that's how we do this.
All right, InstaShift and Geotis. I think since your primary focus is on India, it'll be interesting to hear.
Yeah, go ahead, guys.
Okay, see, guys. So this is how we see this, right? The whole concept of peer-to-peer itself, I see this as a child of our Indians' behavior of jugaad, right? We do a lot of jugaad, and we find a lot of ways and means to get our things done, right? That's how this peer-to-peer system comes into being. Now, the biggest question here is, now when I start doing a lot of my transactions, the banks are going to find me out, and I'm going to be reprimanded for that. What do I do next? See, guys, in India, it's going to be a slow evolution process in crypto market, at least. Doing a conversion from fiat to crypto, there are going to be a frequent issues that are going to keep coming up and propping up like this. But again, there are quite a few solutions. Again, cash can be one of the ways that we'll be introducing in future. And banks, if one bank is there, see, one of the examples that I keep talking when I talk about the spot exchanges, we went and partnered with 11 plus banks so that our spot exchange can keep functioning for deposits and withdrawals. Same thing applies.
I'm sorry to interrupt. I'm just really curious. What do you mean when you say you partnered with a bank?
Exactly. No, not partnered. So we have 11 current accounts with different banks. So even if I get shut down from one bank, I can piggy bank on another bank. So I can do it.
I mean, they still have your PAN card or company registration details, right?
But thankfully, banks
don't talk to each other, right? That's one good part in
banks.
That's
just being hopeful, don't you think?
No. See, the first part of solution, what I was saying is for the spot exchange. Anyway, after June, it's not going to work out for exchanges. But when it comes to individuals, now none of the banks are going to talk to each other. Let's just make it very clear. Even the current blockchain project of doing KYC centralized, just now all 30 banks have come together and they're talking about it, and some project is being kicked out on that. That's going to take even 3 or 4 years to come out. See, when we talk about banks, let's also keep in mind that banks sharing customer information with each other, it's next to the impossible thing that's going to happen.
But Arjun, just again, I'm sorry to interrupt again. I'm just really curious. There were income tax raids on exchanges in India. They collected information on people that are exchanging and transacting on coins. They collected information on their bank accounts, and I would also argue that those bank accounts are flagged right now. Possibly, if they have a central database of these accounts, don't you think the government can pretty much figure out what's going on?
See, that's what we said, right? See, once these things start happening, see, we'll move to Paytm. So then there is cash. You can use this Skrill and all kinds of payments. Right now, we are sticking to banks and UPI based of payments because it's a verifiable form of payment. When there's a dispute, it's easy to verify. So the government can only make it more and more difficult for us to do this. But as long as crypto is legal in India, people are going to find ways. See, cash is one easy way of doing it, right?
There's still limits on how much you can transact in a single cash transaction, right? Correct me if I'm wrong. There is law associated with that.
Yes, so it will happen in multiple lots, right? So it can happen between multiple people. I think the single transaction between 2 users, I think, is the restriction. So if I am having 5 people and I have 5 people, so each of them can do like 2 lakhs worth of transaction and still. So there are always going to be ways, right? People are going to find the ways, and government is going to. So if people find a way in like a couple of days, government is going to take like a couple of months to come back at it, right? So maybe they might get a little bit faster. They have to put see, right now the biggest problem for government is there is no separate agency, right? When the GAR committee report came, the key problem was SEBI said it's not my job, RBI said it's not my job. So they said there may be a need for a separate regulatory authority. So as long as you don't have a separate task force or something that's going to do this, I don't see that happening. That government, see, especially this particular GAR committee report, it's been pending for 2 years. If government has been as fast as it should have been, all these problems in this space would not have happened. The current problems we are facing because of the Amit Bharadwaj scam, all those things happened, this ATC coin and all those things happened because there was no regulation. If government has been fast enough, we won't be facing this kind of issue. It would have been already regulated.
All right.
Yeah.
Thanks. Okay, moving on. What do you guys think really is the future of peer-to-peer exchanges? What are the key? I mean, I'm going to be blending multiple questions in this single shot. What are the key opportunities that you see in the space, and why do you think it's worth pursuing? B, what is the future of these exchanges according to you? Is it going to be more distributed? Is it going to be more decentralized? Is it going to be squished by the government? Where do you see this going in general?
John, I'm interrupting you here. So like before we go into the future, I think we should talk a little bit about how things are right now. Like in the sense that Roman talked about how they would like to think about how becoming decentralized in future, and BISC's model is there for us as an example. All of you, I would like one by one, I would like to ask, starting from Arjun, so in simple terms, removing everything else, how do you so what is happening in technically? So you have, let's say, Bitcoin, and I have rupees, and I have, and both of us have bank accounts, but we would like to ideally not use it. Give me both the cases where we do it with the bank account and in person, and what happens. So start off with Bitcoin in your hand.
Yeah, so see, right now we are dealing only with bank accounts. So what happens technically is, like, I put a sell order in Geotest. So I'll put a certain price. So there are going to be customers who are going to say that I want to sell at 5,50,000, 5,45,000.
No, wait. I'm not concerned about how the system, the workflow works. I'm just concerned about the technical part. So for example, so money, the user, he deposits his money in a multisig wallet, and
yes,
who controls the keys?
So we control the keys completely. It's a multisig wallet, but we control the keys. The customer doesn't have the keys. So it technically works like a spot exchange that we are familiar with in India.
Okay. So the money is in custody of you. Okay. After that, what happens to my rupees? I deposit, like how How do I get the address? Why do I trust it?
Okay, so see, what happens is when you want to make a buy, you come and visit the site. You choose a seller. So right now we are just starting. Over a point of time, you'll have this trust score, how you have in local, right? Number of trades completed, average response time. So all those features will be added. So we are working on an open model, like where you choose the seller, and once you choose a seller, you are going to see his details, like the mode of payment and how he wants the money to be transferred. So then the buyer shows interest and then he makes the payment. So once the payment is made, seller also gets the intimation that buyer has done this. So please check the account, and if you have received the money, just go and click OK. So if seller confirms that he has received the payment, that money that has been held in escrow, that is sent back to the buyer. So if the dispute comes, so that is the problem here is, so far it's very simple. So if the seller denies that I have not received any amount, or if buyer has not paid actually, but he says I have made the payment, that is when the dispute arises. Then we ask both the people to share their bank statements.
Okay.
We try to see for this particular set of case where the transaction happened. If there is a tampering of the document, because that's pretty easy, then we ask to do a screen share. So we ask them to go to the browser, log into the net banking. We try to verify. So as long as there is always a deadlock. In the dispute, there is a deadlock. One person says X happened, the other person says X doesn't happen. So as long as the deadlock is not resolved, the money is held as the escrow. And once the deadlock is removed, like you can prove with the evidence that a payment has happened or not, that is established, then the payment is released.
Okay, so what is that proof of payment? Like the bank receipt, you verify it, and like how do you verify it?
So that's what. See, first thing is we ask both buyer and seller to share their bank statement of that particular period. Right? If the transaction happened on 5th of May, we ask for the transaction from 4th to 6th, maybe. Right? So at that point of time, if they are going to share the original documents, the case is going to be pretty clear. If they are going to submit a forged document, so that is when it gets complex. So then what we do is we call each of them for a hangout session. During the hangout, they have to log into the net banking, and then they have to show that. So we also have the seller's account number, right? And the buyer also.
Great. So
sorry, how is that scalable though?
Go ahead, John.
So we can bring in. See,
no,
right?
please, John, your question.
How do you scale a system like that requires manual hangout escrow checks?
Before we go about technical details into that scaling, like I'm just like wanting to go quickly cycle through everyone and see how the model works. So I think with respect to peer-to-peer exchanges, there are 3 problems we're trying to solve. One problem that we're trying to solve is introducing the customers, the buyer and the seller, their details, whether it be a cryptocurrency end wallet or whether it be a bank account. Basically, it could be any identity where your financial account is. So one problem we're trying to solve is introduce people. Second problem we're trying to solve is make it safe to do the exchange. So act as an escrow. And third is what happens in case of dispute. So I think we have a pretty much overall idea about how their platform does all these 3 things. So I would like to ask this from Roman and Max next. So just a quick overview about, let's say I have rupees or dollars and you have Bitcoin. How do we do it?
Right. It's kind of similar, but there are important differences. So first of all, we don't hold the keys for the Bitcoins or Litecoins that are deposited onto our exchange. We only hold one key. And that means we cannot do anything with the money without the permission of the seller. But in general, the process works the same. People publish their offers, whether they want to buy or sell Bitcoins, and the offers are displayed on HODL, and there is information about which payment methods people want to use. So for example, you can specify a particular bank or a number of banks or a number of payment systems, or you can say, I want to buy or sell using cash. And so people look for offers that they like, and they look for the prices that they prefer. And then they start a contract based on this offer. And then it goes pretty much the same, except again, they deposit the funds into a special P2SH address, which requires 2 keys to unlock the funds. And as soon as the contract is started, the buyer is presented with the banking information or payment information that he needs send.
Where does this contract reside?
Could you please repeat again? Where's this contract?
Where is this contract? Like, what contract are we talking about? Is it a Ethereum smart contract? Something?
Right. So yeah,
contract?
you can. Yeah, so you can essentially say it's a very simple smart contract, but it's also a word that we use internally on the exchange. A contract is like a special page to which both buyer and seller are redirected, and basically it shows all the information about about the funds on the address, about the transactions, the incoming and outcoming transaction, everything you need to do. There's a chat window there. There's a rating for each participants. It's actually the rating is
basically it's trade. We call it trade in our system. And what I wanted to say that once again, Roma didn't mention, we don't have any our cold storage or wallets or whatever you say. We don't store your crypto. We just open unique multi-sig escrow on the public Bitcoin or Litecoin blockchain, and you send money there. We just hold one key to this escrow and the seller holds another key. So we don't say we have like multi-sig system and we hold all the keys. It's a bit like, I don't see the difference between local Bitcoins, to be honest, and other examples. Yeah, we don't hold any crypto nor fiat. So that's why in terms, if we get hacked at some point, the hacker won't be able to move coins because we only have one key and he must hack a seller's computer to move the keys from the. So we have like multiple like hundreds or thousands eventually at some point addresses for each contract or for each trade uniquely and separately. So that's what makes us safer than local Bitcoins and eventually some other peer-to-peer exchanges.
So that last part, actually, I want to ask about that in detail. So like I was earlier saying, 3 parts. First part is how do you enable it, which we have gotten an overview about. And because how your protocol works, you do not work as an escrow. So the second part is rolled out. The third part basically is that how is it happening? Like how is the cash moving?
Right. So the buyer sends money to the seller using the payment method that the seller specified in the offer. So whatever that payment method is, both parties agree that that's the payment method to be used.
So I think I should specifically ask how are disputes resolved?
Right. The disputes is a good question. So because we only have one key, that means our model is kind of limited, and that's actually a good thing. We can only resolve dispute in favor of the seller, because if we decide that we are on the side of the buyer, we still cannot unlock the funds and send them to the buyer, which some people see it as a disadvantage, but I see it as an advantage, because we as a trading platform, we don't have custody over the seller's money. If there's a dispute and if we are on the side of the buyer, then unfortunately the money are going to be locked forever unless the seller decides otherwise. That's just that's a trade-off that we have, and I think it's inherently safer to do it this way. I've been using the exchange myself, and a lot of people have been doing it this way, and they prefer to local Bitcoins. So I think there's a certain risk and there's a certain advantage to that as well.
Great, thank you. So what's your view? Rahul, coming to you. So how does the platform work? How does the protocol work? And who holds the keys? And who holds the cash? And do you work as an escrow? And how are disputes resolved?
Sure. So let me take you through 4 of the problems we've tried to solve. Sellers actually have another problem, which is bringing your coins in, right? And that might take anything from a couple of minutes to 30 minutes or 1 hour, or God forbid, even more. So one of the pieces that we addressed was we introduced a risk management element to it, where we actually do not wait for confirmations and we do an instant credit for 95% of incoming deposits. So there's a mathematical model which helps us do that. There is an inherent risk over here with regards to double spend, which we actually absorb in our business model. So that's one piece that we did try and address fairly early. The second,
what is this risk score based on? Like their transaction history? It's like a credit.
So it's multiple things. It is a history. It is what they are doing on the blockchain. What has that address done before? It's a whole bunch of things, and that protocol is actually fairly well explored. There are a number of working models on that. Bitco Instant is the biggest. Shapeshift uses that. Most of the larger exchanges actually use that as well. So we're using the same protocol.
Are you talking about taint analysis?
We are using some of that as well. I would rather not speak on the specifics here, but we're using a protocol very similar to what Shapeshift does.
Okay.
So that's first. That was really to enable an instant deposit for sellers. The second piece was we felt that buyers do not have enough signals to choose a seller. So we actually do that on their behalf. And again, it's just the same Amazon example all over again, that you buy a product, you don't really choose a seller. The third piece was, this is a fairly tricky one now. You mentioned you want to pay money and I want to sell Bitcoins. It's not really that. You might want Ether and you might want to pay rupees and I might be selling Bitcoins, right? Now that's a very tricky piece which has not yet come about a maturity, but that's really where P2P exchanges will move as well. And we hope to be doing that fairly soon. And that introduces a whole new set of challenges around rate confirmations and etc., which today typically happen during the matching process. So
that cannot happen unless somebody wants to buy Ether and sell their Bitcoin. So what you're saying is that in future you could have traders on your platform that integrate on your behalf, like Shapeshift having an internal kitty of coins, or maybe even your integration with other exchanges, something like that.
Something like that. True.
Okay.
So I mean, I'm just pointing out that there is the need in the market, because regardless of who it is, whether it's local Bitcoins, whether it is us, everyone will have a liquidity problem, because today the trading market is around a bit above $1.5 trillion annually, monthly, and the OTC market is less than 0.1% of that. So the basic problem now, and in fact we've been facing these questions on our TG group as well whole month, that what do you want to do about liquidity? And I feel this is one of the key challenges we will have to overcome in the ecosystem. The fourth point was about security. So I would like to state this unequivocally. We own and we maintain the keys for the sellers' coins because that's the target demographic we are going after. Our users will not be mature enough to manage their own security keys. So we do it. However, we do have a multi-sig mechanism there, which means if a given node is compromised, at least a wallet will not be compromised. The dispute is a very interesting question. I was scared shitless about this when we launched, and we did a lot of work around this. So effectively the model is we introduced a multi-level disincentivization. So if you are bluffing about paying money, and we see this pattern, we actually ban the user. So we've done that for a number of users. If we notice that you again are a first-time user, we will typically not match you against sellers who perhaps are in need, or who haven't got matched for a while. So there are multiple matching heuristics used over there. And finally, we do keep reminding the buyer that it's wrong, because you are locking the seller's coins in the end. So what we've done is we've reverse engineered the timeout on a per geography basis. So we looked very closely at what users are actually doing, and we then introduced our timeouts for India. A very similar mechanism will be done for Canada as well. They have a very separate mechanism. So it's a geography-specific configuration and customization, which will help us reduce disputes. Average today, less than 2% of our confirmed transactions actually land in a dispute call. We handle disputes through a screen sharing mechanism. So we actually do it with the buyer first, We insist on net banking access. We then do it with the seller if required. And we then take a call whether the coins need to be released to the seller or to the buyer. But it is always one way or the other. That's
thanks.
I just wanted to quickly add one thing. I think Rahul said that he considers his users not to be mature enough to handle their own keys. I just want to mention that in our case, handling your own key basically means that you have a payment password that from which partially the key is generated. So essentially, for users through our user interface, it looks like
we don't do passwords either. We do OTPs.
Before we go into that discussion, just hold on. Before we go into that detail, actually, the overview that I'm getting is that first of all, Arjun's and Rahul's their products are about being an escrow and trying to find ways to resolve them. And I'm seeing Rahul's model aligning towards more of data analysis methods, and Arjun's method relying more towards the engineering and social legal aspects and how to solve that. And I see Huddle's Roman and Max's model actually really separate, which is trying to go towards decentralization and transferring the control to the user. So I see that as the overall protocol. What I want to quickly discuss in 5 minutes is that the future where, let's say, if you look at the blockchain technology, and if we try to implement that, and I'm not talking just about the distributed ledger, I'm also talking about the proof of work and everything. Like if what's happening is then that when we're mining, a miner matches a signature, right? So Bitcoin could work just with one opsig, which is checksig, right? Basically, we're just checking signatures. So a purer form of Bitcoin would just have that as a currency, right? But like if we apply that model to what actually a peer-to-peer exchange wants to do, is they want people to disclose some information, which could be, hey, I buried this money under this tree, or it could be, I have money in this X account, I'm going to transfer it to you, or it's money in my Bitcoin address. So it could be anything. It's just about me telling you and proving you through some authentication method, signing by my private key, or witness in court as a contract thing, or bank being the bank transfer receipt. So it's just different methods of seeing that. But in a peer-to-peer method, in a peer-to-peer exchanges protocol, the main goal is to enable users exchange that information, let people meet for that buying and selling requirement, and exchange that information. And there's actually no need to know about who the person is or what that information is, like what that bank account is or even that Bitcoin address is. But what's required is to ensure that they do actually have that. So some kind of protocol where they sign it to their private key that I do own this address or something like that. But basically going towards those models, and also keeping BISC's model in our mind, which is a separate one, and also keeping other models in our mind, which could be like having a smart contract that lets people do what, like just we take your code and we just write it in Solidity instead, and we put it on a smart contract, right? So that could be a competitor to you. So which is doing the same things, except not able to do the dispute resolution part where human beings come in. So what quickly I want to ask is, seeing the future of decentralized exchanges and all that, first of all, do you guys have some internal engineering space for that going towards it? And second of all, or do you see them as not feasible in future practically, and rather want to go towards how we have been operating as humans and our 300 years of learning?
So, like Rahul mentioned, from customer's point of view, it doesn't matter, right? You just need a solution. You're not selling a product here. Customer needs a solution for doing A or doing B, right? So whether it's going to be decentralized or whether it's going to be centralized. So for example, how many of us own 10, 15 different kinds of password? So a lot of us use LastPass, right? But when it comes to conveniences or security or conveniences or anything, people always choose convenience. So right now, customers, what the majority of the traders, they need is a method that is convenient. So I think that is where our initial focus is on. So when the market matures, when people understand how to use a hardware wallet, how to use a paper wallet, how to manage their own keys, which is still, see, right now we all understand that leaving your Bitcoins in the exchange is not the right method, right? But people do. We had a hack last month where 400 Bitcoins got stolen, right? Coin secure. But people still leave that because people don't, they always assume that it's not going to be me this time, it's going to be someone else, right? So right now our focus is on providing a convenient method for the user. But as the market matures, as customers understand that, and we see customers adopting decentralized models, they start right now, if you see these IDEX or Ether Delta, what is the percentage of market share they have for the ERC20 token state? Okay. So once there's market maturity, we'll move there.
Yeah, so I got your answer. So what you're saying is that you're trying to focus on ease of use for users. It should be easy to use for users, and that once users mature, you're going to transform to it. I think that's how it's like a ICO model where you actually. I'm not trying to say that you're like trying to collect money or doing any kind of scam, but I'm saying that where you try to build something that users know of in terms of a product, try to build upon that, and then try to decentralize it in the future when people are mature in using that technology, versus actually taking a bottoms-up approach where you decentralize, and because you know that even if there is one component centralized in the architecture, it's very difficult to in future go on and decentralize it. So you have to think about decentralization from the start. So I think we got your answer, and it makes a lot of sense.
One small point, right? So if we don't have the centralized exchanges, if we had Ether Delta kind of exchanges from the start, where would be Bitcoin adoption today? Where would be, see, if not for Coinbase, we know Coinbase is not the best way to buy your Bitcoins, right? But
I'm not interested in social aspect, a discussion of that. I'm just interested in quick technical aspect. So John you can discuss that with John in 5 minutes. Yeah. Just wrapping up quickly. So what's your view on this, Rahul?
Hey, so two viewpoints on it. Decentralized doesn't mean the government will not come after you, right? They still will. You still got a domain up there. They will find you if they want to. So, so we were very clear on this, that we don't want to do decentralized because it's a way of hiding from the government. We absolutely want to.
The model I was comparing it to was where you don't have a domain, you don't have a site, everybody runs the software, and the people who are running the software,
average consumer. So, but more importantly, I think what people are looking for is transparency, right? So I think a good hybrid model does solve that. People, for example, have been asking us, publish your order book, publish your trades. I think that's a very valid ask, right? And we absolutely want to be going down that route. What was your rate history? So we want to be doing all that, perhaps not on the blockchain, but perhaps as an open API, right? So we need to find some of these answers to building openness and trust, but the blockchain can't be an answer for everything. I think we'll have to find a balance somewhere.
I think Skang doesn't realize he's on mute.
Oh, sorry. What do you say, Roman, about that?
Right. So first of all, I would like to agree with the point that we need to make the process as easy as possible for the users, and the demand right now is just, to buy and sell Bitcoins. I think peer-to-peer exchanges are complicated enough already. And so now we should be thinking about how to, make them easier to use, not more complicated, not adding more complicated features. On the other hand, I think the point that Rahul made about the fact that the government still would come after you if, you have a decentralized exchange. Well, maybe, but I think, having a decentralized exchange it removes the incentives for many governments, at least, to come after you, because there's no single point of failure. There's just a bunch of developers working on this stuff, and if somebody tells those developers to stop, somebody else will probably continue if it's worth continuing. So we are actively looking in the direction of decentralization, but I really don't know where this is going. Honestly, like nobody really knows where Bitcoin is going in the next 5 to 10 years. We're just trying to keep our hand on the pulse and be aware of what's going on in the community and how the technology evolves.
Yeah, and, may I add, in terms of government coming after you, for example, there's a quite interesting example with local bitcoins where it's actually banned in Russia, so you cannot access local bitcoins from Russia IP address. Still, people use VPN, Tor, and everything else, and Russia at the moment accounts for the largest trade market for local bitcoins. The main point is that people will always find a way to exchange, and I doubt that any government can coordinate with another government and with third government and with any government in the world to shut down something as precious as Bitcoin or crypto at all. Yeah, with my humble opinion on that.
So just food for thought there. That how about people having their own nodes, and then all their function is to letting people meet, just transferring encrypted information, which is banking account information from one to another. Their node matches their node has a matching engine though, and to run that matching engine is what actually like mining, and they actually earn some coins or fees or whatever, just something. So thank you guys for about the technical discussion. John?
Yeah. All right, guys, I'm just playing devil's advocate here. So if you look at the internet, there was centralized players like, let's say, Google's or even Coinbase for that matter, that played a crucial role when it came to user adoption. Do you think we would see a future where centralized players would continue to dominate the market? I know it looks like a very generic question, but I think everyone has a different approach to this. Some people think that it needs to be broken down for consumer adoption. Some think that it needs to stay technical enough to a point where things like censorship resistance and anonymity and those aspects need to be taken care of. Where do you think we are headed?
So, see, it all boils down to the point that whether there's a scale advantage in this whole system, right? So, there's going to be like one huge exchange like a Binance or Coinbase that's going to dominate the market. Whether they'll have an advantage over the rest of the people, or whether there's going to be no advantage. So one clear advantage these large players will have is liquidity. So for all the high frequency trading and all those proper traders, this is going to be a key thing. But for small time traders, retail investors who are going to just hodl, I think smaller exchanges actually are the way forward. So much more decentralized, as you say, like it's basically like how mining centralization works, right? When there is some kind of a scale advantage, you build an ASIC and there's a lot of centralization that happens. So I think the economics and the overall, the microeconomics and macroeconomics, they are going to define how this whole thing is going to shape up. I think so for the smaller purchases, smaller exchanges would do. For the large traders, investment banks and corporate trading, I think there's going to be only like maximum 10, 15 huge exchanges. Yeah, that's our viewpoint.
See, it's also a question of when the technology is going to start helping out, people with doing all these really high-speed tradings, right? So it's going to be a slow evolution, as I see, or as we see. But India specific, the problems are different currently. Moving forward, when the adoption is much more and the legal environment is much more clearer, I think there will be a clear movement from even the existing exchanges towards a decentralized, product in future. Yeah.
Do you think the model itself has to evolve in the near future?
Yeah.
So it's like basically fighting in Bitcoin or Bitcoin Cash. The market will decide which one is better. So people are going to fight that this thing is best, but I think market will rule.
Okay, again, I'm just playing devil's advocate again. Is the whole P2P model just a way around the regulatory scrutiny that happens? And would it be just players like Robinhood and Coinbase, and even in India, for instance, Zeppe leading the revolution? Is P2P just complementary technology, or is it going to be something that replaces centralized players, according to HODL and InstaShift?
Okay. Oh, sorry. Oh, sorry.
Okay. Yeah, I guess my mic is on. Okay, I'll go ahead. I think it's not going to be a complementary technology, but it's all going to depend on how hard the centralized exchanges are regulated. If there's a lot of regulations, a lot of KYC, AML bullshit that people need to go through, then they will divert to peer-to-peer and decentralized exchanges, which have less of that, or none of that at all. You know, if it's convenient enough to use a centralized exchange, then probably they will opt out for that, or they will opt out for, you know, things like Robinhood app, where you can buy Bitcoins easily. And I'm sure in other countries there will be retail solutions like that as well. So it all is going to depend on, you know, the simplicity of use, you know, how much KYC ML you have, whether your volumes are you know, large enough, or you just want to buy a little bit of Bitcoins or Litecoins or whatever else there is. So I think the point is, I think peer-to-peer exchanges and decentralized exchanges are an important part of the infrastructure that will not go away, because they guarantee that the system is censorship resistant.
Mm-hmm. Yeah. All right. So I'm just pointing out somewhat of a dichotomy that I see there. You mentioned that censorship resistance is guaranteed by P2P exchanges, or at least it offers it. But at the same time, if governments come and hassle around with the process, you would have to give in. So would you say that P2P is the ultimate solution for censorship resistance?
No, it's not an ultimate solution. It's just
one of the many possibilities, right?
Yeah, and then again, there's peer-to-peer and then there's decentralized. If peer-to-peer exchanges will start to feel the heat, then they will try and go ahead and decentralize themselves. And, you know, as everyone else said, I think you know, people find a way to
right.
do what they want to do. So.
All right. Yeah. Actually, on that note, I would just mention that Binance.com has actually announced a bounty-like system for people working on decentralized exchanges. So maybe we might see more decentralized exchanges coming in the future, where it's just tokens to tokens, and P2P plays the connect between fiat and tokens. So, okay. Last question for all three exchanges: what excites you most about the space in the next 10 years?
Let's start with Rahul.
All right.
Yeah. Sure. So I think overall the volume is something. So the cash market, like I mentioned, is $40 trillion of trading right now annually globally. But the piece which we don't talk about is how much is the derivatives market. The derivatives market is actually twice of that, right? And we haven't even begun touching on that. So everyone is still barely talking on margin trading, lending, and so on and so forth. But really, when derivatives come out, that is where things will get very exciting. But the problem there, of course, is derivatives requires liquidity, and liquidity typically comes inside centralized exchanges. So, so just to connect back to the previous question, it's probably not a either or over here, right? Because complex instruments will require centralized intervention or order books.
Right.
They may not deal with fiat, or they might get licensed, like what happens in South Korea or Japan. And you might have P2P or OTC markets evolving as the fiat connection, like you were saying.
Right. So I think that's where platforms like T0 and Nasdaq would come in. I'm sorry to interrupt. Do you think that's where they come in?
So about derivatives in particular, I find it very far-fetched. I find it very far-fetched to think how OTC and P2P exchanges will play a role. Potentially, yes, but given how complex they are, it's really a trading domain thing, right? And OTC, like the HODL guys are also saying, it's a common man's play, right? You come, buy, sell. But people are not going to get option pricing and deltas and God knows, technical.
That's where the big boys come in.
Yeah.
All right. Yeah, the others, what excites you the most for the next 10 years?
Yeah, should we
Roman?
say? Okay.
No, I mean, like either one of you, it's cool.
Yeah, the potential price of Bitcoin, I think, excites everyone in next 5 to 10 years.
Any price prediction?
To be honest, there's a lot of things happening. Lightning Network, Short signatures, musts, whatever. The tech is amazing. The people are working there, amazing. Software developers are, I think, the most skilled software developers currently working in crypto. I'm not trying to offend anyone else, but these people are really, really smart. And so eventually, big banks onboarding to crypto wagon, governments starting to understand that there's no opportunity actually to fight this movement. You either adopt or you fail, like we see in Japan, where like I think 3% of GDP already accounts for crypto transactions. Yeah, and all other governments that don't onboard crypto, they basically fail in some way. So there's a lot of things that excite us, and I think that's why we're all working in crypto.
I don't know about you. What excites me the most is the upcoming Bitcoin memes in the next 10 years. That's going to be fun.
All right. What about you guys, Jotis?
Okay, so good that what we heard from Moderator. See, now when these governments and the economy as such starts adopting cryptocurrencies, you'll have a future wherein they're going to be fiat and they're going to be cryptocurrencies which are going to coexist with each having their own purpose to solve. Now, in such an environment, now an exchange becomes the gateway for all these fiat to crypto to keep moving, efficiently between each other. So in that future, where there is a lot of innovation that's going to keep happening. For example, see, when internet started, no one could have thought about an Uber or an Ola that we are enjoying right now. So a lot of innovation that are going to keep coming up in the future, and exchange is going to fall in the center of all these innovations by facilitating the movement between fiat and crypto and a lot of other cryptos as well, because each one is going to have its own purpose. So being at the center of a lot of this innovation is something that's really exciting us a lot.
All right. Okay, so thanks, guys. Thanks for joining in. I think we'll be wrapping it up now. We would be taking questions from a few users and forwarding it to you guys. So it'll be good if you can write back responses. But yeah, that's it. Thanks for joining in today.
Wonderful, guys. Thanks for setting up this session. It was great. Thanks a lot.
Thanks,
All right, guys.
Thank you, guys. Cheers. Bye-bye.
Cheers.